Friday, April 26th, last Friday in April. Here we are 4 weeks into April, and the all-important 10-year T-note has stayed between 247 and 259, and mortgage rates at 4.5 the whole month. Nothing happening, and yet there's a lot happening. The storyline right now is really strange. Those rates should have gone up, both mortgages and the 10-year. As we came out of fear that we were on the cusp of a recession, newest economic data says no, we're not. We're not red hot either. And the first 90 days GDP for 2019 came in over 3%, although very much weaker than that. And buried in it, the best measure of inflation, Fed has a target of 2%, collapsed down to 1.3%. And this is consternation at the Fed, that inflation, instead of rising as it is supposed to, with unemployment as low as it is, that's against the law. To the Fed's great credit, a dominant group, by December, began to question the operating law of the Fed, that an economy that's too hot and unemployment that's too low, you're going to get inflation. And the dominant group back there now 4 months ago said, wait a minute, that's not what's taking place. And the Fed is tangled, trying to figure out what it should do. I believe in them, and I have a great deal of compassion for them. If you carry around every day the weight of the world in your hands, and you feel the incredible weight of your own actions or inactions, after a while you begin to think that absolutely anything that happens is your fault. That's not necessarily true. So the Fed, trying to figure out what to do, is off on this rabbit track of is our target for inflation too low? Should it be higher? If we go through a period of low inflation, should we drop interest rates and print money until inflation goes back up above target? All this expectation stuff, and they're missing it. And I hammer at this with frequency, so forgive me. The whole world went to a period of incipient deflation beginning in the 1990s. And that was simultaneous with the opening of China, the Iron Curtain came down, and the advent of IT, which meant price discovery and impossible to raise prices anywhere, and also made wages globally fungible through trade. From the 1990s forward, trade has grown twice as fast as global GDP, and we wonder why prices go down? The key piece is China's behavior. China has exhausted its growth model, which is debt-based, repayment not necessary, losses carried by state-owned banks, new loans given to state-owned industries. China, in order to keep that game going, is now undercutting the whole rest of the world. China provides no-cost credit to anybody in China who will make anything, and now is beginning to provide no-cost credit to anybody who will buy those things from China. And it literally undercuts the rest of the world. If this sounds like I'm aboard with Donald Trump's trade war, I am as to the objective but not the method. China, there isn't any future in trying to humiliate China publicly. There's no future in trying to get China to retreat in any way or concede anything in public. In private, sure. There's also no way to get at China one-on-one. All successful trade deals, especially the ones since World War II, have been done in concert and in private. And if all of those who are on the receiving end of China's predatory behavior made it clear to China that it has to stop, or else China will stop. So I wish I could tell you that Trump's trade war, even if it's resolved in his favor, is going to make progress with this pricing issue, but I don't see it. The good news is in the old days predatory trade ended with a war. We're not going to do that either. But in the meantime, the Fed is considering cutting its cost of money because the inflation rate is falling, even though the rest of the economy is doing rather well. And that risks bubbles. And my hope is that the Fed figures out causation and figures out for once that it's not the Fed's fault. In the meantime, enjoy low interest rates. They're probably going down. Have a good weekend.